Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for Monday, the 27th of June, 2016, the week beginning through Friday, July 1st. This is the end of the quarter, the end of the month, the end of the first half of the year, and we had the surprise passage of the vote to leave the euro by Britain, by the UK. Was not looking that way in the polling, was not looking that way according to early results, and then it happened overnight here in the U.S., and the markets across the world took a hit. Here's the ES front month futures contract. This is a nice cup and handle formation. This is a great example of technicals are one thing, but obviously you got to stick with what the market's actually doing in day-by-day trade. This is also one of the reasons we're not swing traders. Get crushed in that type of stuff. So, again, had that not passed, I think the markets would have had a very nice technical setup for a strong run. Instead, we got a big gap down today. It's a great trading day for us anyways. Forex, futures, and stocks. More for Forex and futures a little bit just because we had some huge winners there. But we had some stock stuff that worked as well after the gap down. So always nice to be able to look at a day like today where the world markets take a hit, where so many people weren't expecting something that happened, and yet all we do is make money. And we don't have anything on the table overnight to worry about. So that's where, anyways, this is the ES. This is the front month futures contract of the S&P 500. This is the daily chart. You can see we were right at highs near 2120 when this hit. Oh, and guess what we traded to today? When you look at the intraday, you'll see it and laugh. 2062.50 came into play yet again. So we tanked in the market here, 120 points from yesterday's high to today's low at 2,000 or so overnight. Let's take a look at everything, and then we'll talk about the intraday action a little bit better. So the QM oil contract, crude oil down at 47.57.50. That's down $2.50 on the news. Gold shot higher, 56.9. S&P down 75.91. And look at that, breaking under that 2025 is not going to be pretty if it happens on the S&P cash index. NDX also flirting with danger, although it's now going to be, if you look at the count, we're going to be 11 bars into a seeker buy signal. 2 more days down, you'll have a 13 buy signal. Boy, I'll be interested to see if that is even a factor, given everything else that's going to be going on in the markets here. Stocks, so much for that breakout, so much for the nice technical breakout of a inverse head and shoulders formation, then pull back, run, pull back, and hold the breakout point, and then turn back up. And then just like that's the day right there where everybody, all the institutions usually are like, okay, boom, let's go buy it, the breakout day after the retest. And instead, crush-o-matic. Biotechs, this is also ugly. So you lose the breakout on the SOX, and you're looking at a potential breakdown on the biotechs. Nothing pretty there. VIX gained 851 to 25.76, almost up to that green static trend line. Now, interesting point about this. We had a 13 buy signal back at the end of March on the VIX. We have the pink risk line from that buy signal, which was turned into be exactly support. We've never broken that line. That 13 buy signal is still in place until that line's broken or one of two other things happen. One of those is getting to that green line. We're almost there. So it took a couple months, but we made it happen. Trend closed at 2.18. I talked yesterday about the possibility of some big numbers dropping off the 10-day moving average, but obviously here's another big number to replace it, so I don't see the 10-day moving average going down anytime soon. NASDAQ volume, biggest day of a long time, 3.5 billion shares on the NASDAQ. This was not an options expiration, so that's a big trading day, obviously, now that things have started going. Advanced decline ratio on the NASDAQ, negative 2,606. That is the single lowest breadth day in the market of the last year. Everything down. Advanced decline ratio on the New York, not the worst of the year. We had a couple worse back in January, but still obviously very negative at negative 2138. Google loses 29 points. Boy, Google under 680 is trouble as well. Apple loses $2.70. Nothing positive there. There's still some strength at 92, even though we traded just underneath it. So I think 92 is the number to watch on Apple. Amazon trying to break back under that red static trend line. Really held up comparatively if you think about it. It's still near highs, down 23 points. Netflix down $3.22. There's an inverted cup formation there. And those are most of the ones we look at. Oh, yeah, Tesla. Let's take a look at Tesla. We got Tesla down, a little bit. Actually, almost came back to even for the session. All right, let's take a look at the futures as they traded for the week. And again, remember 2062.50 is that key cosmic number in the futures. We closed the week before on the futures contract right around, we are at 2060. Remember, that's the Friday's close last week. We gapped up Monday and kind of drifted back down, but never filled the gap. Tuesday was very flat. Wednesday we drifted up, then back down, closed even. So it's a lot of even days. Thursday, we gapped up and pushed higher late in the day, looking at that early returns coming in. Everybody thought that it wasn't going to pass, and then boom, overnight it passes, and the markets tank around the world and the gap down here. But what's interesting is the gap down on Friday, and we immediately shot up. We made a lot of money in the futures on that move. Takes us right to 2062.50. Played around there for about 15 minutes as the high of the day, and then rolled over. It's such a magnet number. And then rolled over and closed back down near the lows of the session. The NASDAQ side was down 200 points for the session, and that's a big move down in the NASDAQ. That's all I can tell you. That is an ugly, ugly move in general. All right, so now we've got the economic calendar for the week ahead. We've got Monday, we've got international trade and goods orders here. Tuesday, GDP. It's the third look. Case-Shiller 20-city index, consumer confidence. We've got the MBA mortgage index on Wednesday, along with personal income and spending and core PCE price index. Pending home sales 30 minutes in, and crude oil inventories an hour in. Thursday, initial and continuing jobless claims, Chicago PMI, natty gas. Friday, ISM index, construction spending, and then auto and truck sales in the afternoon. Now, let's focus on the other major thing. Obviously, there's going to be a lot of reaction here, a lot of money trying to figure out what this means for the markets in general. But the one thing to keep in mind here is that this is end of month, end of quarter, end of second half of the year. And we're leading into the 4th of July weekend, which means the following Monday, 4th of July, is markets are closed. So typically what you'd expect is this. I'm sure we're going to have a lot of movement on Monday as a reaction to everything that's going on, so it'll be a better than normal Monday. Try to stay on the right side of trade as usual. Watch those futures because you don't want to be fighting that when you're doing your stock trading. Tuesday also could be a decent day, and because of this big gap down, they may try to make some adjustments to what stocks they're showing for end of quarter. Most of the big players would have already been done and ready for those statements to print on Thursday. Now with this, I don't know. They're going to have to take a look at it and see what they want to show. So there could be some extra volatility Tuesday and Wednesday as they close out some positions or potentially open some new ones they want to show on the books for those statements. So that's a possibility, but they got to get it done. They can't wait till the last day. So Thursday, I would usually tell you that Wednesday by late in the day, everybody starts to leave because nobody cares about the last day of the quarter, the last day of June for the statements. Thursday, everything's done. And then, of course, who's going to come back for a Friday to start July when you got a 3-day weekend? So I would have said basically it's really a 5-day weekend that starts Wednesday evening and goes until the following Monday night. But who knows what this volatility that's going to be occurring here from this. So we'll be obviously paying attention all week. I look forward to the week. We had an okay week this week until Friday, and then a great day on Friday, superb day, my best day of the year so far. But hopefully this next week is better across the board, more volume, more volatility, more better technical trading. And then after we get through 4th of July weekend, that's usually a time of year where, as I talked about in the Friday preview, some things happen in the markets as money starts to get placed. So for the second half of the year. So that's it. Charts as usual brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks and maybe extend the trials. Currently, anyway, it takes a trial for an extra week because of the 4th of July holiday. So feel free to check in with us and contact us on the website, and we'll see what we can do. But anyways, have a great weekend. We look forward to this next week and then a week-long weekend for 4th of July.